Again, all of GTA, then just Durham region is kind of how I've had this set up. So this is all of GTA, new listings to sales. So the bottom green line there, the light green line there, that's your sales, right? So it's slowly tracking up, which is very seasonal, which we kind of expect. So off the December lows, month over month, it's still creeping up, which is good to see. And the new listings in all of GTA came down. So there was less listings last month that came in on the market, which again, could be the start of a trend of us going back down into the middle of summer, fall here. It could bounce back up, but you could see kind of last year it had like a little rebound there. I don't know if this is the summer lull where you're getting that July, August slowdown, and then maybe September we pick back up with new listings. That seems to have happened each and every both of the last years, right? That's why I love this graph. That darker green line on the top, you could see the lull in the summer there, and then it spikes back up in the fall before it heads back down in winter. So, it really gives you a good perspective of the seasonality. And then I'll share Durham region there for you. So that's the Durham region graph. Very similar trend. Durham region, we did the same. Sales actually came down slightly in Durham region, and then new listings fell like all of GTA there as well. But very similar seasonal trend. Again, just kind of like the active inventory, everything's just kind of beefed up a little bit as far as numbers, where as far as new listings, sales, you could see if you look the past 2-3 years, the sales are pretty flat, right? They have a little bit of seasonal adjustment going up and down, which really is kind of the story of the inventory, right? Is the new listings, the active inventory is, kind of what is dictating the absorption rate of the months of inventory. Sales can only, do so much. And I mean, that's why people are kind of saying sales are falling off and all that. I'm like, I don't see sales falling off like dramatically in the resale market. Now, the next slide I'm going to show you is the new construction market or the pre-construction market, and that's where the real challenge is. So this was shared by Altus Group, and this is Greater Toronto new home sales. And again, this data is very delayed. It's very hard to come by, so take that with a grain of salt. So this is for May, not for June. But look at that number. At the bottom there, 345, only 345 sales for new construction. And I heard condos, like new construction, like the numbers are like double digits. Like they're incredibly low considering we were in the thousands and there was lineups around the buildings, right? So, that's really the strain on the market still and pulling it down. And yeah, that is, talking about the sales being lower in that section of real estate. This is from Broker Bay. Number of offers. Again, I don't know. Broker Bay is kind of cool. I don't know if anyone else has been playing around with some of their market updates, and they have some kind of neat graphs in there and stats that are interesting. And again, like who's tracking number of offers, right? There isn't much, but I guess the asterisk with this is that you're actually registering the offer through Broker Bay. I'm sure there's lots of people. I know I never do. I just email my offer to the agent and say you registered. There's no requirement to do that, right? It's convenience, but they can do it themselves, right? If they want to notify their agents. Some people do, some people don't. So and yeah, so the stat I have there, the highlighted was last year, to give you some context here. And give me a sec. So yeah, last year it was the 2333 number. So that was June 2024. And at the bottom, you could see we only had 1822. So a year ago, the number of offers that were happening in Durham region was substantially more at 23. Well, I guess I shouldn't say substantially more. 2,300 to 1,800 is not crazy, but it is lower. It is a little bit lower. And again, we're not seeing kind of multiple offers as much. And if we are, it's not like 15 offers or 10 offers. It's usually a handful, that type of thing. So yeah, those are down slightly. Now, we look at active inventory. Again, here's for me the kind of the big, quote unquote story. I'm waiting for this number to level off, or I guess this number wasn't as steep as it was last month, but active inventory in GTA almost touched at one point it was touched to 32,000 listings, which we've never seen. We've never ever seen that much inventory in, I'm talking 20, 25 years, right? So as far as the data that I can look back, we haven't seen this much inventory. So it really is what's driving it. If sales you could see over the past few years are are relatively flat, the inventory just keeps piling up. And this is resale inventory, right? This is not new construction inventory. This is not pre-con. This has no pre-con in these numbers. This is all what is active on the MLS. And Durham region, just as bad, that graph, as far as active inventory. Again, Durham region has never seen this much inventory on the market. So almost 3,000 listings.
A lot more homes now than we did 25 years ago.
We do have a lot more homes, but we have a bigger population though too, right?
So is that pushing the numbers of inventory up because there's that many more people who decide they're going to sell their homes and there's that many more homes around?
Yeah, fair argument. Fair argument. I mean, maybe that's why you're saying, that there is more people, there is more inventory. There would be a natural increase in both, right? But we're not seeing sales match that, right? Which sales are kind of telling you that both parties are coming together, so sales aren't increasing if in fact they're decreasing. So it's like,
But
if you're seeing new inventory, then you should see sales keep pace with that.
but we're not seeing the sales. And we
No.
know that we have the inventory, but my point is just there, it's just a question is, do we have that much more inventory in Durham and in the GTA because there's so many more homes than there were 25 years ago?
Yeah, I mean, this is where absorption rate comes in, right? So this is why I kind of like absorption rate, because absorption rate is giving you that relationship between sales and active inventory, right? So great, if there's more inventory, there's more homes for sale. Are the buyers keeping pace with the sellers, right? Right now, the sellers are kind of saying, hey, we want to unload our home. And then the buyers are saying, we're not buying, right? And so more inventory piles up. Things are just moving slower, which just, and again, I'm saying it negatively, but it's not a negative thing. It's a negative thing for sellers right now. It's a great thing for buyers, right? It's absolutely a great thing for buyers. And they're in a buyer's market. And to me, that's the story, right? Like it is what it is. Whether you're talking to your seller who wants to list, you have to set their expectations. To say, look, we're not in the same market. Look at this graph. If you wanted to sell last year, 2 years ago, we were in a seller's market. You would have had more leverage there. You would have more options. You could be more aggressive, with your pricing, with your strategy, with whatever. But not anymore. Right now, there's just too many options for buyers. So that's just the narrative that you need to be sharing. And here's Durham region showing that we are in a buyer's market for the first time ever, right? Like, look at this graph. I think we touched into at 28% there last August, September. But we came into, we're below that 30, that number is kind of blurred out there. I think it's 27.9. So that's the lowest absorption rate that we've seen in Durham region. So it is into a buyer's market again. We'll see if it stays there or continues down. But I mean, look at the GTA has been in there for like a year now, almost, right? The GTA has been in a buyer's market for a year. And remember, this is not pre-construction. There is zero pre-construction factored into this graph. This is only the resale market. And so when we talk about the bloodbath of the pre-construction market, I couldn't imagine what the absorption rate is or what we did if we added both together, both numbers together. The sales and the amount of inventory available in the assignment market that nobody knows has data on. This is active on MLS, right? That you can search and find and see. So, Durham region's into that buyer's market now officially. Again, remember that 30% number is just an arbitrary number, but it gives you that relationship between how much inventory there is and who's buying or if there's buying happen. Okay, last but not least, I have price. So prices dipped down ever so slightly. Again, I still think they're very resilient. I don't think prices are crashing. I don't think the numbers are showing that yet. To me, when you have that pressure on the active inventory, it would make sense that price reductions happen and that, if sellers are truly motivated, they will lower their price. There's the Durham region price came down slightly as well. But again, nothing really to write home about. We're talking 0.5% decrease month over month. Annually, still pretty flat from year over year. Nothing really crazy, which, again, to me is a good sign too, right? That, prices have been pretty stable, right? Hence why, buyers trying to get a great deal may not work. The sellers will say, no, thanks. So they have other options or they'll take their house off the market or they just can't sell it at that price. Again, we'll see what's going on. To me, the active inventory is the leading indicator, which should lower prices kind of as a lagging indicator, but that's just my own personal thoughts and suggestion there. So showing volume. Here's showing volume. This is for Toronto, not GTA, just Toronto. The amount of showing. So I did kind of something similar. So the bottom number there, that 87,000 was for June of 2025, compared to last year, there was 97,000 showings, which is interesting to me, right? And showings came down last month in Toronto, month over month. I don't know. I'm still having a tough time putting a narrative to this or putting a rationale behind this. Again, I guess showings down, right? Sales are down, but they're not really that much down, right? Based off the other two graphs, they're very seasonal. So, I don't know about you guys, but I'm finding that if buyers are out there, it's not like it used to be. Remember when there was multiple offers and you'd have to show so many more homes. Now, if you have a buyer, they're like, I like this home. It's available. I'll buy it. Like I find they're a little bit more motivated to lock into something versus like, you used to work with a buyer, you'd show them 80 homes, you'd offer 6 times, and you're like, okay, I finally got one with this buyer. Where now it's like you get a buyer, you're like, okay, it's like I got a listing back in the day. I got some leverage here, and you're really confident, right? Where the listing agents are begging for feedback, and it's funny how the tables have turned. Honestly, I like to chuckle a little bit on it, but
Did you read um,
thanks.
can't remember where I read this, but did you read where somebody an agent was sued because they completed the questions about buyer feedback and said the price was too high?
Really?
Yeah, and that agent got sued and lost because he made a comment. I've forgotten all of the details, but when you were just talking about that, it brought it back to my mind.
The
That he
buyer
said,
sued,
"Oh,
the buyer sued. The buyer ended up suing, or someone
That
lost
makes sense.
money because of that. I believe it was the buyer.
The buyer sued their buyer rep because they told the seller that their price was too high.
Yes, I believe that it was in REM magazine.
yeah,
Okay, so
I read it somewhere else, but
the
it's
buyer
out
was
there."
saying that they weren't represented properly because I guess they didn't get the house then. So they were upset that they didn't. I'll have to read the article. I didn't read it, but yeah, that makes.
So I never answer that question.
But no, that what? Yeah, I guess yeah. If it makes you liable, but how would the buyer find that out too? They would have had to get it from the listing brokerage, that feedback showing that they said. So they said that the price was too high because they wanted to represent their buyer to get a lower price, though, right? Like yeah,
Maybe
that's
it's
yeah. I
so
jokingly
high.
say that. Yeah.
Anyway,
Well, it was always like when you're holding back offers, you'd laugh at the people that were like, "Oh, it's listed too low." You're like, "I know, I on purpose, right?" So I'll have to read that article. I'll check that out because I haven't, I didn't read that, but yeah. So there's showings for Durham region. Again, very similar trends with that. So last year, 34,000, and now we're down to 28,000 for showings in Durham region. So yeah, very similar trend as what was happening in Toronto. This graph is super interesting. Trevor sent me this, and I really got me thinking. And it took me a while. I had to look at this chart for a little bit, so I'll break it down for you. But I think the idea of this is it's showing all the previous corrections or quote unquote crashes. So it's taken the peak of the market in each of those years. So there was a peak in 1989, there was a peak in 2027, there was a peak in 2017. And then the peak here was January 2022, and showing kind of what happened after there was a peak of a market. And the smaller ones, the 2027 one and the 2017 one were shorter lived, right? We remember the 2017 one was the Kathleen Wynne announcement, April 20th. I think I still remember it to the day where she announced this was all coming out, and then the next day it was like there was a 10% price drop, but it went away quicker, right? And then after 2018, it kind of went away. Obviously, the correlation between the two bigger ones, the one in the 90s, the early 90s to now looks eerily similar. We're almost down 30%, and you could see it almost traded sideways for a number of years, coming down slightly up. And I mean, I was like, wow, that's a very powerful image if that is how we're going to play out. of kind of just trading, sideways. Part of me goes, that's not that bad. I mean, we've seen our 30% correction. We've seen the 30, what is it, around 31% correction, which is roughly where we've dropped from that peak of February and January of 2022. And then it kind of bumps back up and then, still only ends up being around a 32% correction. So some could look at this positively and go, yeah, we're fine. We're going to make it okay. And others may say, you know what, that's a long time for values not to go up or start increasing significantly. I don't know how you interpret that. And again, this could be one of those things that it doesn't actually correlate. It doesn't play out the same, that, it has, in the past. But yeah, thought it was interesting. And then one more chart I want to share with you is this last one, which I'm pretty sure I've shared this one before, but this one always interests me. And I love when I hear mortgage brokers, talking, I always ask them, what are you recommending, right? Like it's my way of like asking a realtor how the market is to see how their response is. I like to hear a mortgage broker's response of what are you recommending as far as products right now, variable, fixed, 5-year, 3-year. And I like to hear their rationale behind it because I'm like, I don't know, like I've all told you that, the whatever number of increases the Bank of Canada did that screwed a lot of people. Mortgage brokers were going around spitting variable, right? Take variable. Don't worry, rates aren't going anywhere. And then we all, suckers took them and got screwed, right? Or, not screwed, but, had a lot of pain. Okay, thank you. Got screwed was the right word. And yeah, so I mean, just looking at this chart, I go, the variable rate is that kind of purplish line that is now the dominant, product in the market again, right? Where I'm going, okay, are we doing this all over again? And I don't know if you guys remember, Parker came on and was like, there's going to be 2 rate cuts, recommending variable. Now Bilal's going, oh, I think it's going to be 50-50. And now I'm going, okay, we're changing the stories here. And I'm sitting here going like, I don't know, 4% to me is not bad. Like if you can, lock in for 5 years at what was it, 410, I think he said, if you're uninsured, 420, 420.
410 if you're
No, he said 379 if you were insured. He said he got a 379 because that's what he ended up negotiating it down for the insured mortgage. The uninsured one was like 424, something like that, 429, somewhere in the low fours. And I was like,
I love how you get penalized for being able to put more down.
I know, that's a whole other issue, but yeah. No, so it's interesting to see that. And then like the shared, so the fixed rate less than 1 year. And then the 5-year fixed rate, look how low that 5-year fixed rate is. Which again used to be the premium product, right? Like that used to be what everybody would go into, right? And you wanted that security and you didn't want to gamble. You didn't want to have to worry about Bank of Canada announcements and things like that. So I don't know. I just find the graph super interesting. And I find, you're kind of getting insights into the way people are thinking and like the way I don't want to say gambling, but they're taking a chance by taking a variable rate that, sure the rate could come down, but it could go back up just as easily, right? And so I don't know. Again, these are kind of what's happening in the market. They're not predictions, and sharing, what's happening as far as what are people thinking? What are people doing as far as their actions? And I know mortgage brokers were share the 3-year variable was kind of like, hey, take that because don't worry, in 3 years we're going to be good again. But as we know, things can change.